into a little bit of investment research and investing in general because that's where I think we're going to give the most value to our listeners today. So you invest yourself, correct?
Yes, sir.
So what do you look for, like in your investment research, to find a good investment?
Yeah, I think this again, not my idea. I'm not taking credit here. This is Warren Buffett 100%, but I think the old adage, buy companies, not stocks.
Yeah,
I think, and also let's say Peter Lynch, another great investor, buy things that you
that you
understand.
know. Yeah,
Yeah, that you know and you understand. So that's definitely my number one thing. Um, I look for companies that I use personally, or I know people that use it, and I know that they provide something that people want, and I can clearly understand. Number one, and then number two, I pick companies, not stocks. So names that I know will be around. I'm a long-term investor, just to be
yeah.
clear. So I'm not trying to make a quick buck.
It's the
I'm
only
trying
way to
to,
be an investor.
yeah, exactly, exactly,
Yeah,
exactly. It's the only way to be in my opinion as well. So, I'm trying to compound my money over time. So I'm looking for companies that have stable cash flows, that are profitable. Not so much growth stories, although there are great growth stories, and you should always, look for
yeah,
the best opportunity. But that's not my particular style. And I just look for example, like I'll tell you some of the names right now that I can hold, and people can kind of get an idea of what I like. Microsoft, I have Visa, Bank of America, American Express, ExxonMobil. These are all the point I'm trying to make here is that you
great
guys know
businesses.
these
Yeah,
names.
yeah.
They're
They
not
have moats.
exactly. They have
Yeah,
moats. They've been established, and I think that over time, when you put money into companies like this, you compound your money. And for example, right now where we are in the market, if you get in at a better price, you're just boosting your returns over time. So right now, I think it's actually on the contrary to popular belief, a great time to be investing for
yeah.
sure, and
A hundred
especially in
percent.
stable companies.
100%. You know, a couple points that you touched about, and I think that there's a lot of mistakes that people our age or people in general make when investing. The majority of people when they think of investing, they, for example, when you talked about picking companies over stocks, right? I feel the majority of people they pick stocks over companies. So instead of looking at the company itself, how good of a company it is, how stable the company is, how good it's going to be in the future, they're just looking at the stock name, how the stock has performed instead of actually looking at the fundamentals. I think that's one of the mistakes people make. I think another one is not having a long term horizon,
Yes.
right? People look at stocks as saying, because you could see the value of a stock going up or down every single day.
Hmm.
So going back to what Warren Buffett says, you have a farm, for example, and he uses a farm because he owns a good amount of farmland,
Hmm.
right? You have a farm, you're making more crops every single year. You're selling these crops. If there is another farmer that comes up to you every single day and says, "I would buy this farm from you at this price," and he changes his price every single day,
Hmm.
you would only sell it if the price makes sense. So that's the only reason that you're looking at the price,
Yeah.
right? But you're only buying that farm because you know what it's going to produce for you, and
Exactly.
that's essentially just looking at the company over the stock,
Exactly.
right? So what are a couple of mistakes that people make when they look at investing?
I think a number, like a huge one that's not talked about enough, is for young people, like diversify your
Yeah,
investments. Like I get a lot of people, for example, that might be huge into crypto but do no equity, or do a lot of equity, no crypto, or do a lot of whatever real estate, no equity.
yeah,
So it's like, why would you not, in my opinion, utilize every single asset class? And that's kind of what led me down this road to where I am now. I was like, I'm kind of too niche and I want to learn more about everything because I know that, for example, if you have an excellent real estate investor, there's a good chance that the guys for the last 5 years that have been doing real estate have absolutely boomed, right? But maybe now when interest rates go up, and things slow down, maybe prices come back to normal, they might not do so well. But there are other areas that might do great.
yeah.
So why wouldn't you diversify and try to learn as much as possible about different asset classes and how to boost your returns through every asset class? I think that's a big one. I think again what you said, kind of checking prices way too much.
Yeah,
If you and that comes from the long term
yeah.
time
It's
horizon.
yeah,
If it's this comes from Warren Buffett as well. If you have a house, you're not going to ask for a quote on the house every year because you're not thinking about selling your house
yeah,
every year.
yeah,
It should be the same with a stock. If you're buying
yeah,
companies and not stocks, why would I check the price of the stock
yeah.
every day if I
Hundred
know that
percent.
this is a long term investment? So I think those are the top two
Yeah,
that I see from people our age specifically.
yeah. I also think the emotional side of
Oh,
investing
for sure.
is a huge problem right now because people, it's easy to say I'm a long term investor.
Hmm.
the majority of people will tell you I'm a long-term investor.
Yeah.
Doesn't mean they're a long-term investor.
Exactly.
Right?
100%.
They'll buy a stock now and it could be a great business. They did their analysis. So this is where I'm saying, like, understanding what a great investment is does not make you a great investor either, because you have to get to the point where you understand it's a great investor, but you stick to your fundamental knowledge. What does this mean? You can get into a business that is undervalued, but now you see the stock continue to go down, and you have to understand that it just makes it more attractive. So you buy more, but the majority of people do the complete opposite.
I think to that point, this is another great, and I would encourage anybody who's interested in valuation to look at Aswath Damodaran, which I know that you follow as well. And he touches this point perfectly. He explains the difference between price and value, right?
Yeah.
Because just because something has a certain price on any given day doesn't mean that that's the actual value of it.
Yeah.
So to make that point clear, right? Look at, for example, how do you value a house? You look at the comparable houses around it, right?
And you look at there's two ways. Cash flows, it's the same way like in stocks.
But I'm talking about, like, let's say residential real estate. The price of the value, or the value of the actual house, is based on what somebody's willing to pay. Point final. Why? Because it's not a business.
Yeah.
And they're comparing it to the other houses around, right?
Yeah.
The neighborhood. Whatever people are willing to pay, that's what they pay. That's not the same with a company. With a company, it's based. Well, okay. Well, let me finish my point. So with a company, you are looking at what cash flows can I produce with this company will give me the actual value of the company, which is why we do, let's say, a discounted cash flow. And we don't just look at comparables. You could look at comparables, but if you want to really look at the intrinsic value of a company, you have to project the cash flows of the company and say, what does this company produce, and what is the actual value that I'm getting out of the company?
Yeah. I agree, because you did say residential. So like residential, when you're looking to purchase a house, the way people value it, like the appraisers, is with comps, right?
Yeah.
But when you're looking at real estate investors, the majority of them, I think it's very similar to investing in stocks or businesses, because let's say I want to generate a 10% return. Cash on cash. So
I think 100%. I think from my point, I was talking more about
residential.
If you're people going and buying a house, not investing in a property. Now, of course, any investment, look at cash flow.
As an investor, you got to look at cash flows. You got to look at what it's going to generate.
Cash flow is king for all investments.
Exactly.
And I think let's make that very clear. If you want to get into investing, maybe for somebody that watching this that has no idea even where to start with cash flow analysis. Learn how to do a discounted cash flow, and you'll learn everything that you need to learn about looking and evaluating a business. And I think that's the most important thing.
A discounted cash flow, for the people that don't know, it's essentially following the idea that the value of a company or an investment is just the present value of all its future cash flows. So that's what that analysis does, and it gives you a value of that company or that investment at the time. So when you do that analysis, you can come up with a range, right, of valuation. I think that's the way you do it. That's the way I do it too, where you say, okay, worst case scenario, the company or this investment should be at this value, best case scenario at this value. So if the price now is under your worst case scenario, that makes it a great investment. Those are the ones you're trying to look for. It's the value is up here, but the price is here. So you're buying dollars for 20 cents.
100%.
And that's the whole idea of value investing and investing in the long term. You can't go wrong. You have a higher margin of safety. So let's dig into what are your favorite. I know you talked about some of the companies